I'm not a crook. Good morning, everybody. I'm Ed Parcaut here with Brian. Oh, no, Brian. This is Mike today. This is not
Brian
53. That's after
Galkey.
this. That's after this. This is Mike Kelly, Real Estate Jerky Daily.
Well, tell Brian hi from me.
Will do. All right. I was wrong yesterday.
What about
my predictions for today?
I've got them written down.
It doesn't matter. I said 5.1.
You said 5.1. What is
so
it?
Remember that. So the Federal Housing Finance Agency House Price Index came in today, which measures home prices appreciation on single-family homes with conforming loan amounts, increased by 0.1% in July and decreased 0.8 year over year from a previous revised report of 5.3 to 4.5. So I would not be going up on the stage to spin the wheel. I'm over, not under.
Yep, exactly. You got to wait for the next turn.
All right. So Case-Shiller Home Price Index, which tracks the changes in value of residential real estate in general, all residential real estate, hit another all-time high for July. The national index, which covers 9 U.S. Census divisions, reported a 5% gain in July, down from 5.5 reading in June. Missed it by that much on that one.
You said
5.1. We're at 5.
Okay.
The other one's 4.5. So you average it. I missed it by 3.
Yeah.
So that's the news this week, and that's all. So basically, bottom line, no bubble still.
Yeah. Really?
Yeah, really.
There's a competition bubble.
Is there?
Yeah. We've got a lot of people looking for homes, but for some reason they're waiting for something to happen. So the competition isn't as great as it will be when they finally get done waiting and realize, oh, we waited for nothing.
Right. They need to keep moving.
Yeah.
It's going to cost them so much more.
So anyway, I mean, the one home I put on the market, 7 offers in a couple days, got it pending right away. Putting another one on the market tomorrow after I get the pictures, and that'll probably be one of the same things. So there we go.
Yeah, I mean, and there am I.
Yeah, therefore, quit recording me. Watch.
Well, stop talking so loud.
Oh, is that what it is?
Yeah, that's what it is. And
good morning, Rebecca.
And today, 10 years up again. Let me just refresh this because sometimes it doesn't.
She says, "Congrats, thank you, Rebecca."
For what? Your place?
New listings.
Oh yeah. 10 years up, 3.7526, up 1 basis point. Woo, through the roof. It opened at 3.7527
to 7.
Wow, yeah. But our mortgage-backed securities, it's a death of 1,000 cuts. A little bit every day we're losing. And people keep calling me and saying, I thought the rates went down 0.5% last week. No, the rates did not go down 0.5% last week. The Fed funds rate went down 0.5%, which has to do with prime rate, credit cards rate, car loans. So basically all those two things I just said still haven't affected anything. You're still at 29.5% instead of 30.
So should they wait for the next?
Yeah, well, and then I've had other people go, I really want to refinance, but should I wait until Fed drops it another quarter? Because they think they tie. They sometimes are on the same street, but they go in different directions.
They do.
There we go. I finally got the analogy that worked.
Yeah, that one worked.
All right. So that's the problem. So and it's like, we have no idea. Usually the first time Fed does something, it affects the market. And it did. We went up a little bit. The next time, it's not going to have any effect because those are short-term rates, not long-term rate. What affects the mortgage-backed securities and all this bond stuff is where we are with the market and how people are feeling overall.
True.
50% is really feeling bad. 20-some% is feeling and the other 30 is like, I'm making so much money, I don't care.
Yeah.
And I have nothing against those people who are laughing, making all the money, because that is how our society is set up.
Yep.
And what I mean by that is, our tax system's basically set up for the rich and not for the working class. And that's not the rich's fault. That's how they put the taxes in place.
Right.
And that's whoever elects these people who want to charge more taxes is the problem.
Well, and the other hand is scared money don't make no money.
No, it's why you can never gamble with scared money.
Yeah.
Because
you're afraid to lose it. You got to take that risk. And right now, the risk is you might own a home.
Yeah. And the other thing, back to the risk part. Well, that's why when business owners start companies, they get a better tax rate because they're risking and doing other things and creating jobs and other stuff for people. And that's what the government wants, even though they say how negative they are and how they do this and they do price gouging.
Gorging would be eating.
I know that's what'd she say? I was trying to make what
Oh,
Kamala said.
I don't.
It wasn't gouging, it was something else.
Yeah.
Price gauging. Yeah. They gauge the prices.
Do they?
The bottom line is the house market is amazing right now still, meaning that if you write an offer, you're only compete against a couple of people. In another few months, it's going to be a lot more. And people are going to say, "How you guys been saying that all year?"
Yeah. And again, here it is.
Well, it's still here, and we still haven't had this bubble I've been talking about forever. The only bubble we've lost multiple times is opportunity.
Yeah.
Affordability of homes right now is very unaffordable. And as long as they keep going up, they become even more unaffordable.
True. I had a client ask me this morning, and a very good friend asked me this morning, when do you think this will all turn around? I said, well, the biggest problem is supply. So until we actually figure that bubble out, prices aren't going to change much. Now, in Florida, I finally got that guy's right number in Florida. So I'll have that for us tomorrow. You've got all those properties that we think are hitting the market as a result of having to be upgraded to withstand hurricanes. Guess what's coming to Florida again?
What, a hurricane?
Another hurricane. We saw it this morning on the good news. So nationally, we're up in volume. Stanislaus County, we're behind a lot in volume, listing volume. So prices are going to just continue to move upwards.
And they're not at the point where they're building multiple homes now, because there's some sentiment about the builders that, hey, it's going to get better. But most of the sentiment, it's not here yet.
Yeah, I don't. Yeah.
Yeah, we're not here yet.
Right.
Yeah. So.
And what's the gauge? What's the 50?
The 50, that's the home builders index.
Yeah. They want it to be 50 or more.
They want they want it 55 to 60.
Yeah.
And above 60 means they're really doing well. So we're not anywhere close to that. Yet. No, at 45, we're nowhere close to that.
We've got, my auntie says,
hello. Thank you.
Hello, Mike.
I'm glad you didn't forget me again.
Hello, Ed. Your feelings were so hurt.
That's right. I still can't get my Ed Parcaut to go live, and I've done everything to fix it.
That's weird.
Yeah.
Good morning, Auntie. Anyway, that's about it. I mean, opportunity bubble will burst here, I think, probably right after the election.
Well, I think it already has. We just haven't seen that because people are getting laid off. Middle management are going away. They're getting rid of those. And guess who can afford these homes? Middle management.
Yeah.
And if they're losing their jobs and then they can't get another job. I have a vet, got medically discharged out of the military.
Okay.
She's on her 30, 60 days of the leave you get before you're completely out.
Right.
She can't find a job. Save her life.
Why?
Everybody wants to give her part-time sales jobs.
BS.
She's trying to, she's getting
what did she do
teaching.
In the military?
She was, I don't remember.
Okay.
But that's not what she's going for. She's going for, working on her teacher's degree.
Okay.
Which I'm like, what? Are you crazy? And
like
so she just needs a job so that she can get her house, because she gets major disability, plus she gets money to go to school, but she needs just a little bit more to have a job. Well, it can't be a part-time job, because that 2 year that everybody hears about is, if you have a part-time job, we need 2-year history to average those numbers. If you go into sales, I need a 2-year average history. If you go into a full-time job with whatever that number is per hour, I don't need to wait. It's automatic. And that's what she's running into. Everybody wants to give her a part-time job because people don't want to give full-time jobs right now.
Because of all the other stuff that they got to do when they have a full-time employee.
Well, not only that, just where the market is.
Yeah.
And that's why I keep saying we're kind of at that point where it's getting bad, but we haven't seen it. It's all this news out there. The 10% of the influencer are creating all this noise in the media that it's so amazing that people are thinking that. And it's still not.
It's amazing.
Just go to when you actually pay for your groceries, remember that every time when you go to vote is all I got to say.
Yeah, there you go.
All right. That's all I have.
Okay. And I didn't have anything, but we're going to say have a good day because today's Tuesday.
That's
Tuesday
right.
means it's a good day.
Yeah. And we'll be back tomorrow. So we'll talk to you tomorrow. Make it a great day.
When we're back tomorrow, it'll be Wednesday.
All right. I'm going to hit goodbye. Everybody, goodbye. Make it a great day.
I was trying to sound like Kamala.